over the last 3 years. The precious metal sector is in a malaise. And I think in the very near term probably continues the malaise.
Talking to us for several years about a secular bull market in natural resources and precious metals, but then we've been having a bit of a intermission for the last year and a half or so. Can you talk to us about where we find ourselves and now applying those principles that you just enumerated?
Well, I would point out that the intermission has only taken place in precious metals. In other parts of the resource industry, including the oil and gas industry, which you and I talked about in depth a couple of years ago, the response has been spectacular. The uranium industry, despite a bit of a malaise, has also performed very, very, very well over the last 3 years. The precious metal sector is in a malaise, and I think in the very near term probably continues the malaise. The U.S. Treasury, or pardon me, the U.S. Fed has rightfully, I think, allowed interest rates to rise. You need to compensate savers for inflation. The fact that they have been able to do that, particularly when their counterparties at other central banks around the world have not kept pace, has meant that the U.S. dollar is very strong. So while gold is doing extraordinarily well in terms of currencies, like, as an example, the Turkish lira or even the euro, in dollar terms, investors have done poorly. While in terms of other currencies, they've done well. Most of your listeners, of course, spend dollars, so it's the dollar returns that are problematic to them. My suspicion is that if we are able to continue to raise interest rates in the United States, that the dollar will continue strong and gold and silver will do poorly. I believe, but I don't know, that at some point in time, the Fed will be forced to reverse course on interest rates, because any reversion of interest rates to their real mean, which is to say a positive real rate of return, would, I believe, be devastating to the U.S. economy. And I suspect that to the extent that the Fed has to resume liquidity measures and has to lower interest rates, that you will see then, like you saw at the end of 1975 or like you saw in 2002, precious metals off to the races. Note that I said that I sort of presumed that's my suspicion. I believe that some of your listeners probably have 100% of their net worth in precious metals, which is not a very smart thing to do. I think that investments in any category need to be right-sized to your means and to your needs. For me personally, Dunnigan, I welcome lower precious metals prices because I continue to be in the process of acquiring physical precious metals and precious metals equities. And something that you are very bullish about in the future, you want to go lower so you can buy more cheaper. The truth is, right now, if the gold price was at $2,200 an ounce, I wouldn't sell any. By contrast, if the price was at $1,500 an ounce, I would buy much more. For me personally, it is in my interest to see the gold price lower rather than higher. I realize that my psychological circumstance and my financial circumstance is different than the circumstances that many of your viewers enjoy. But I'm trying to point out the attitudinal difference between myself and other investors. I am not disappointed by lower gold and silver prices. I'm attracted to lower gold and silver prices because I don't need to experience a liquidity event in the next 10 days, either financially or psychologically.
If we could rotate our discussion to a global perspective on this dynamic that's been described as the East-West split or the Asian Bretton Woods, where the dollar dominance that has been present for the last half century or so seems to be under actual threat by Eastern countries that have decided that they would rather not be penalized if they don't march in lockstep to whatever Washington thinks that they should or whatever Europe thinks that they should. So how do you see that evolving, and how do you see that affecting investors? Conflicts aside, like there was this whole thing with Russia, Ukraine that made us talk for somewhat about Gazprom specific stocks in Russia, but that's not, I'm asking, I guess, a broader question about this whole geo split between the East and the West and how you see that affecting the landscape going forward.
I do see the threat that you described, although I think it's important in terms of understanding the threat that we more properly describe the genesis. This isn't Russia or China or India weakening the U.S. dollar as the world's reserve currency. This is the U.S. weakening the U.S. dollar as a reserve currency. We have chosen, first of all, to debase our own currency with $30 trillion in on-balance sheet liabilities and $120 trillion in off-balance sheet liabilities. Places like China that generate surpluses are rightly asking themselves why they should accept 300 basis points in interest in a currency where the purchasing power is depreciating by 900 basis points. In other words, why should they give up 6% of their purchasing power per annum to a country that is hostile to them? Then the United States has chosen to weaponize its currency. While we accuse the Chinese of being expansionist, and they are, it's worthy to note that the United States maintains a military presence in 100 countries around the world, while the Chinese maintain a military presence in 4. The idea that the United States has decided to extraterritorialize its preference, telling other countries how to live, telling other countries how to organize their societies, while in some cases admirable, obviously is inconvenient for the countries that the United States is bossing around. By freezing Russia and China and India and other countries out of, or threatening to force them out of the SWIFT banking system, we give them no choice but to denominate trade between themselves in mediums other than the U.S. dollar. Blaming the Chinese, blaming the Indians, blaming the Saudis, blaming the Russians for doing something that we forced them to do is at once disingenuous and ignorant. We need to understand that we are the authors of our own demise. And by the way, I think it'll take a very long time to destabilize the U.S. dollar. My experience over the last 30 years is that as little as other societies trust each other, they still trust us more than they trust each other. And I believe that the U.S. dollar, despite its threats, will continue to be the world's reserve currency for a substantial period of time, despite the best efforts of the United States to undermine its own status. It is really important that your listeners, when they consider the destabilization of the dollar, don't let the big thinkers in the United States, be they Democrat or be they Republican, to blame the Russians, the Chinese, the Japanese, or the Indians. You need to point to the demise of the U.S. dollar as a spending or savings medium or as a medium of exchange. You need to point the finger of blame at the United States.
These decision makers who have mismanaged the U.S. dollar from 1913 to the present, where it's lost almost all of its value, purchasing power along that way, especially accelerating after the closing of the gold window in 1971, et cetera. Do you see that as the United States itself, the United States government, or do you see that as part of international banking that transcends the United States and always has, even before the formation of the United States?
I think the most important financial institutions and international institutions are America-centric. I'm not one of those who believes that there's some overarching conspiracy involving the Bilderbergs and the Rothschilds and all that kind of stuff. I don't see that. I see there being a globalist fascist class, certainly, with common interests, and I see it being American-led.